Seoul stocks ended higher despite Middle East concerns as investors shifted focus to earnings season. We look at how the market reacted to geopolitical noise and what the big players are expecting next.
Stop using your finger for notes, sketches, and edits. This Jam Jake stylus pen gives your iPad a smoother, more precise writing feel with palm rejection so your hand can rest naturally on the screen. It charges fast, works for hours, and comes with replacement tips. Perfect for school, work, or creative projects. Check the link in the comments to grab it on Amazon.
Next up, meet Yoo Yeon-sik, the preliminary candidate for Yeongdeungpo mayor, who has a massive vision for transforming the district into a cultural hub centered around the completion of the Second Sejong Center. Then we dive into the real estate market chaos. As fire sales clear inventory, Seoul apartment listings are drying up, putting serious upward price pressure on buyers. Finally, we explore the massive pivot in global trade, how the India-South Korea partnership is evolving into a new era of technology and inclusive growth. Stay with us for the full story. Seoul stocks concluded the trading session higher on Monday, demonstrating resilience despite renewed geopolitical tensions in the Middle East, as market focus decisively shifted toward the upcoming earnings season. The local currency also strengthened against the US dollar. The benchmark Korea Composite Stock Price Index, or KOSPI, managed a gain of 27.17 points, marking a 0.44% increase to close at 6,219.09, having previously peaked at 6,278.36. Trading volume remained moderate, with 683.8 million shares traded, valued at 22.3 trillion won, or approximately $15.1 billion. Institutional investors played a net buying role, accumulating 181.7 billion won. Conversely, foreign and retail investors saw a net outflow of 437.4 billion won. Despite growing uncertainties stemming from U.S.-Iran peace talks, highlighted by the U.S. Navy's seizure of an Iranian-flagged cargo ship in the Gulf of Oman, market sensitivity to Middle East risks appears to be diminishing. Lee Kyoung-min, an analyst at Daishin Securities, noted that repeated discussions during peace negotiations are making the market less reactive to these geopolitical events, redirecting investor attention toward corporate performance. The earnings season is now the primary driver for market sentiment. Attention is keenly focused on SK hynix, South Korea's leading chipmaker, which is widely anticipated to release its first quarter results this week, following Samsung Electronics' earlier guidance on operating profit. In the large-cap sector, performance was mixed, with battery and defense stocks leading the gains. Samsung Electronics, the market bellwether, saw a slight decline of 0.69% to 214,501. In contrast, SK hynix posted a strong gain of 3.37%, rising to 1,166,001. Battery giant LG Energy Solution advanced by 2.63% to 429,001, buoyed by expectations for its energy storage system business. Defense shares also benefited from regional tensions, with Hanwha Aerospace gaining 0.14% to 1,425,001, and LIG Defense and Aerospace climbing 5.14% to 921,001. On the downside, major financial group KB Financial fell by 0.86% to 160,901, and biofirm Celltrion slipped 0.96% to 205,501. The Korean won appreciated slightly, quoting at 1,477.21 against the US dollar as of 3:30 p.m., marking a gain of 6.31 from the previous session. Yoo Yeon-sik, a preliminary candidate for the Yeongdeungpo district mayor from the Democratic Party of Korea, has announced a key campaign promise: the completion of the Second Sejong Center, positioning Yeongdeungpo as a major cultural hub. Speaking on the 20th, Yoo declared his vision to transform the district into a cultural everyday city where cultural experiences are accessible to all residents. He affirmed his commitment to finishing the Second Sejong Center, a project he initiated during his tenure as head of the Seoul Metropolitan Government's Culture Bureau. The Second Sejong Center addresses a critical regional imbalance in performance infrastructure. The project was conceived to counter the concentration of venues in downtown and southeastern Seoul, particularly targeting the cultural deficit in southwestern Seoul, which currently has fewer than 2 large performance venues with over 1,000 seats compared to 7 downtown, 10 in the southeast, and 4 in the northeast. Yoo plans to develop a comprehensive cultural complex featuring a large performance venue with an estimated 2,000 seats, alongside smaller halls, a performing arts archive, a citizens' cultural academy, and artist rehearsal spaces. A key feature of the plan is the inclusion of outdoor open screens designed to provide free, everyday access to performances. Yoo stated this initiative will elevate Yeongdeungpo into a cultural hub for southwestern Seoul and a global cultural city. Yoo is a seasoned administrative expert with 30 years of experience, holding degrees from Seoul National University, and having served in high-level roles including head of the Seoul Metropolitan Government's Culture Bureau, Climate and Environment Headquarters, and the Waterworks Authority. He is recognized as an execution-oriented policy expert due to his comprehensive experience spanning policy, planning through to implementation. Seoul apartment listings are rapidly diminishing as fire sales clear inventory, intensifying price pressure across the market. Despite the ongoing capital gains tax moratorium for multi-home owners expiring on May 9, a significant shortage of available properties is emerging, particularly in areas outside the prime Gangnam district. This scarcity is most acute in non-Gangnam districts, where mid to low-priced complexes, valued under 1.5 billion won and largely free from lending restrictions, are concentrated, fueling upward price trends. Data from the real estate platform, Seoul reveals a sharp contraction in supply. As of Sunday, Seoul apartment sale listings stood at 74,602 units, marking a 6.8% decrease from 80,080 units recorded a month prior. This decline was universal, affecting all 25 autonomous districts, with a total gross reduction of 7,273 units during the period. While transaction volume has increased ahead of the moratorium deadline, depleting existing stock, the inflow of new inventory remained sluggish, totaling only around 1,800 units, resulting in a net reduction in listings. Despite the government extending the tax moratorium benefit for applications filed by May 9, the impact on increasing the supply of new listings has not met market expectations. Conversely, transaction activity remains robust. Land transaction permit applications have surged, with filings reaching between 2,300 and 2,500 per week this month, accumulating 7,354 applications as of Sunday. Analysts anticipate this upward trajectory will continue, projecting the total to surpass 10,000 applications by the end of the month. This pace represents a clear escalation compared to February's 5,138 applications and March's 8,550. The India-South Korea partnership is entering a new, ambitious phase characterized by innovation, inclusivity, and forward-looking strategy, moving beyond traditional trade to encompass technology, manufacturing, and deep people-to-people ties. Reaffirming their commitment on Monday, both nations set clear goals for accelerated growth, targeting bilateral trade to reach $50 billion by 2030, up from the current level approaching $27 billion. The economic collaboration is deeply rooted in Korean investment, which has significantly transformed key Indian sectors including automobiles, electronics, and advanced manufacturing. Korean firms have succeeded by tailoring products to local needs, prioritizing long-term investment, and building strong brands that emphasize trust and service, effectively integrating into the local market. Conversely, Indian companies are actively seeking opportunities in South Korea, particularly in IT services, pharmaceuticals, and emerging technologies. The next crucial phase of the partnership must prioritize inclusivity by increasing the participation of small and medium enterprises, SMEs, which form the backbone of both economies. To facilitate this, governments and industry associations must provide structured support to Korean SMEs regarding regulations and market structures. Key initiatives proposed include establishing dedicated platforms like an India-Korea SME dialogue forum for knowledge sharing and problem solving, alongside providing resources such as Korean language business guides to bridge informational gaps. Furthermore, renegotiating and modernizing the Comprehensive Economic Partnership Agreement, CEPA, is a priority to enhance Indian export penetration into South Korea. Beyond established sectors, the partnership holds immense potential in strategic areas such as semiconductors, electric vehicles, batteries, shipbuilding, clean energy, and critical minerals, aiming to build resilient, future-ready global supply chains. The human dimension remains vital, with initiatives focused on internships and exchange visits to foster connections among young professionals and entrepreneurs. As the global economy navigates complex geopolitical shifts, the India-Korea relationship is positioning itself to advance through clear focus and effective collaboration, demonstrating how complementary strengths can drive mutual benefit and set new models for international cooperation.